So today I wanted to talk about Intuit stock and start with a quote from Warren Buffett. It's better to buy a great company at a fair price than a fair company at a great price. And that's exactly what we have here with Intuit, ticker INTU. And the stock has been, oversold a lot on AI fears here, in my opinion. The largest tax software in the world is Intuit, and they have over 100 million customers. Near It's trading near its 52-week low right now, and the PE ratio it's at its lowest. I mean, usually this stock is trading at about 60 times price to earnings, and right now we're getting a pretty sweet discount here at 38.41. And I know that sounds high still, but I mean, this is a fantastic company run beautifully with a wide moat and multiple revenue lines, seeing some, very strong growth. I mean, they're utilizing AI. They have a partnership with OpenAI, and they're starting to chase after, some of these bigger, medium, middle market sized businesses. And gives them a big, big runway here going forward. I mean, their revenue is super, super sticky, that nice, juicy annual recurring revenue, because it's just so integrated from customer generation on the leads to the customer all the way to, gathering, storing, helping you build the accounts, and actually paying the taxes at the end. I mean, full service from beginning of service to at beginning of a customer life cycle to the end here. And they have a very strong name in compliance, right? A big thing for companies is that, you have to be compliant with GAAP accounting, you have to be compliant with, federal taxes, state taxes, what you can deduct and can't. So it's a very trusted and gold standard in the industry, and we're talking about companies with that are storing significant accounting data, right? And that's, lead generations too. I mean, very, very pertinent key data that you want to hold. And like companies have where they have to, these internal rules usually that at least 5 years of data, but certainly more, right? Like five's an emergency, but usually around 12 years of data is what I've seen the normal be. But with all that data, they don't want to leave and put it on a new system. And like migrations, I remember when we would do M&A and we'd merge a new company in. I mean, migrating accounting systems was a nightmare. No one wants to do that. And certainly this threat of artificial intelligence doing your taxes, no place. AI hallucinates every day. There's absolutely no place for you know AI in compliance and passing a compliance check here, especially when we're going towards medium market, middle market companies here, right? And it's just an overall solid product. Right now, it seems expensive, but their runway, growth rate, and moat make it really interesting right now. And I really don't think AI is coming from this stock. Again, there's no way in hell the head of compliance is going to change from QuickBooks to like Grok or Gemini. I mean, truly is the gold standard. But let's talk more about some of these AI features that they're actually implementing. I mean, their management team's been talking about recently. Their entire product strategy is essentially AI driven, right? I mean, automated bookkeeping, predictive cash flow forecasts, smart invoicing and payment reminders, AI guided tax return optimization, personalized lending recommendations inside Credit Karma, automated marketing and segments inside Mailchimp, and especially accounting is a big uplifting here. I mean, due to compliance and regulation, it's a nightmare called data transfer, right? And new agentic AI offerings are driving deep synergies across the customer lineup. With the help of AI agents, Credit Karma users can now have up to 80% of their taxes filed and ready to go in TurboTax before the peak tax season, which is, a big, big reduction in overhead that only Intuit can provide. They're very affordable compared to many other options, and the integrations between their services is a huge moat, right? I mean, payments to payroll, to QuickBooks, to TurboTax. I mean, their customers basically have nothing bad to say about them. The CEO has been talking a lot about building out their capabilities for those larger businesses in the middle market, and it's going to be a huge growth opportunity. And I mean, adding HR support to their payroll services, building out enterprise accounting capabilities, all competitors, are scared. This is a tough titan in the industry to beat, and they're starting to expand into different markets and different categories here, and they're adding AI features. I mean, I don't know how many businesses are down this much because of a threat to AI that are positioned as well as into it. And I mean, the synergies between Credit Karma and TurboTax should continue to deepen, which drives additional cross-selling opportunities for Intuit's personal finance platform. They both continue to grow very impressively, as you can see from the chart here. And that's also obviously by looking at the return on invested capital. But before we hop there, I mean, it's just really impressive to see that their online service revenue is QuickBooks, which is a pretty old product, right? I mean, you can see since 2018, it's still growing at 18.5% a year at this size, right? With these laws of large numbers for how big of a company it is, right? And then take a look at the Credit Karma, grew 33%, showing those two lines of really strong growth, diversified revenue. And that's what I mean. We didn't see this come into play until 2022. And you can see it took a little bit, and then now they're starting to really take off here. But that's why you always look at the return on invested capital. And I mean, look at these guys. I mean, anything in excess of 10%, we're talking stellar, stellar, stellar performance. And they're consistently over that. I mean, they're over 14.5%. It doesn't sound like much over 10%, right? But I mean, even 2% compounded over 20 years winds up making the world's difference in your final value, right? And it's just impressive. I'm a big advocate of looking at return on invested capital. And I mean, it's just, eh, they are superlative allocators of capital, to say the least. And hopping on, I just wanted to show you some of the rest of the core fundamental metrics here, right? I mean, revenue's still growing overall at 9% a year. And I have it mapped out here. We're looking at quarterly revenue from 23 to 25. And you can see, obviously, they peak around tax season, but it's just, for a company this size to be growing that much and have these diversified lines also growing, and then having the tailwinds here of AI is very, very impressive in my opinion. And take a look at the profitability. I mean, we're talking about consolidated net income in blue growing at all 19% a year and some change. EBITDA in orange growing at 16% a year and some change. And my favorite, the juicy, juicy free cash flow at almost 22% a year, leading the way. I mean, just this is exactly what you want to see from a company. If I'm going to take a risk, and this is just me speaking, I'm not risking on, you know, AST Space Mobile, or I'm not risking it on these nuclear reactor startups. This is a risk I would take. You know what I'm saying? Like, it is such a stellar company. It's truly trading at a fair price. Is AI scary? Yeah, it's shaking up the world right now. But with compliance, with how this industry's run, with tax return, I mean, could you imagine Grok doing your tax return and taking like a $20,000 deduction for no reason? And they're on the hook for it. But just very, very impressively run company, again, at a risk reward that's skewed, I believe, in my to the reward side here, but that's just my opinion. And then you would think, you will at least you want to check out, is the company issuing more shares and diluting? No. Is the company have massive debt? No. And their debt to equity ratio is, they have 40 cents of debt for every dollar worth of equity. So, I mean, very completely manageable. I mean, usually you'd even say anything under 5 times, 4 times is reasonable. I mean, very, very strong balance sheet and well-run company. And then one thing I like to look at too is, I think trading on insider trades are important, definitely, especially when you see them in cluster buys and for a pretty sizable amount. I like to see people of prominence. We're talking the C-suite, the CEO, the CFO, the COO, the CTO, board of directors, the president, and the founder and director. Which, let me remind you, there's Harvard Business Review studies out there that show founder-led companies versus non-founder-led companies over time outperform significantly, and it's just really interesting. And even compared to the S&P 500, so a founder, another checkpoint, and they have skin in the game to the tune of $3.6 billion, right? I mean, he's holding a little over 5.5 million shares, 2% of the company. So our interests are aligned here. This guy's fighting for us, with us. I hate when you scroll down at the bottom, you see 0%. I at least want to see something. But and just to kind of show you the drivers going forward and how I really think AI is a tailwind. I'm not just saying that. I really think it's going to boost the company. The AI powered workforce and tools drive velocity and efficiency 12 times. By 12 times, it's improved that the developer velocity in the past 5 years, 40% faster coding, 39% more code delivered per developer, 15% reduction in people contacting them with questions. And they have a massive runway here. Again, what I was talking about, targeting this middle market, starting to go after these larger companies. It's $186 billion opportunity across all these segments here, right? Get customers, pay and get paid, and so on. And this like tealish light blue is where they think with the biggest opportunity being, pay and get paid, with being the problem that they want to solve for the client. And these last two kind of just go together in one point. As AI spawns out and a lot of these LLMs come and personal customization tools, I think there's going to be integration problems. I think there's going to be pay problems with from a cost perspective. I think management of all of these things. I like to have everything in one place is always just so much cleaner, right? And that's exactly the point they're illustrating. Is on averages, businesses use 7 to 25 apps. Too many apps, data, excessive costs, but they're the all-in-one platform, and like from the beginning, I said they will help you with marketing, customer relations, invoicing, they'll help you get bill with bill pay, lines of credit. They'll help you find an advisor or term loans. They'll help you with payroll, accounting, compliance. That will help you pay your taxes. I mean, it's an all-in-one package. And, for a company hopping back here, let me go to the overview, see how long it takes. This company's trading at a really nice discount right now. And just with the same quote I started with, the same quote I'm going to end with, it's nicer to buy a great company at a fair price than a fair company at a great price. And I think Intuit is a great opportunity to buy. I mean, I truly think fair value is probably around 750. If you really want to play with some of the variables and get out there, I can see it in the low 800s. I mean, I think it's a steal right now, guys. Let me know what you think in the comments, and I'll talk to you in the next video.